Welcome back to Morning Markets on Monday the 26th of July. George Bell here, investment analyst, to provide an update on the week ahead. After a bout of volatility, equity markets in sterling terms finished the week higher. Last week in the US, the S&P 500 was up 1.9%, the Nasdaq 2.8%, in the UK, FTSE 100 up around 0.28%, and the 250 up around 1.9%. In Europe, up around 1.8%, and in Asia, a bit of a mix of volatility there. Down actually around 1.3%. Over the week, growth as an investment style outperformed value by around 1.4%. Within bond markets, you experienced quite a bit of movement in yields, but overall, markets were supported by strong earnings data and continued central bank support, helping to moderate concerns around the COVID Delta variant, driving investors towards government bonds. Within the bond market, for UK gilts on the 10-year, we saw quite a wide range of readings. The gilt yield moved from around 0.62 at the start of the week all the way down to around 0.49, 0.5, but settled on Friday at around 0.58%. In the US Treasuries on the 10-year, again a wide range going from 1.26% at the start of the week down to around 1.14, but settled on Friday at a level of around 1.28%. In FX markets, in terms of sterling dollar, settled at around 137, sterling against the euro around 117. A couple of data prints coming up this week and a few things to keep an eye out for, which we'll be discussing. Quite a bit of earnings data, which is due out from companies such as Apple, Facebook, Microsoft, Alphabet or Google, and Amazon, who will be reporting their quarterly results. We also have the US Central Bank, so the Federal Reserve, meeting this week. The expectation is for rates to remain at the current levels of around 0 to 0.25%, but it will be interesting to see the debate around the FOMC, or the Federal Reserve members, around their economic outlook, inflation expectations, and therefore the division of views around the appropriate point at which to begin tapering policy. We also have a number of economic data prints, including GDP estimates from the US, where we're expecting to see data which will reflect the levels of activity which were generally increasing over the second quarter, supporting growth. Within the Eurozone's largest economies, including Germany, France, Italy and Spain, they'll be publishing their preliminary estimates for the second quarter GDP, inflation rates and jobless data. Here in the UK, we'll hear from the Bank of England, along with the nationwide house price index and some updated data on car production, giving a bit of an indication of the health of the economy here in the UK. Overnight, we received the preliminary Purchasing Managers Index data, so PMI readings for the manufacturing and the service sectors within Japan. On the manufacturing side, the data remains strong, with the reading above 50, coming in at 52.2. Though this is demonstrating expansion in purchasing managers, it is demonstrating a degree of softening, with the data coming down from around 52.4 in June. Similar on the service side, the reading pulled in from 48 to 46.4, with sentiment really challenged by tighter activity restrictions which were imposed due to the COVID higher infection rates. That's all for today. We look forward to bringing you up to date here tomorrow morning on Morning Markets.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.